Good morning, everyone. Thanks for joining us today. We have an update with Cameron Groome, CEO of Microbix, which trades on the TSX under the ticker MBX. This session will consist of a lot of Q&A, so feel free to input your questions in the box at the bottom of your screen, or you can email them to me as well. Although it'll be mostly Q&A, it will contain forward-looking statements, so if you'd like to know more about those, you can find them on the company's presentation on the website, which has been updated today. With that out of the way, I'd like to introduce Cameron. Hi, Cameron.
Good morning, Deborah.
Nice to see you.
Thank you very much. It's good to be here and look forward to providing everyone an update and hopefully addressing some insightful and interesting questions as well.
Sounds good. Do you want to kick it off with just a general corporate update?
Sure. Why don't I give some overview comments and then we can get into it. I don't think we'll page flip the presentation, which we have been talking about refreshing as well, because many people have seen it. But there is a full corporate presentation on the company website, as well as, of course, fulsome disclosures from our work as a public company as well. We're, broadly speaking, Microbix is continuing our evolution as a sales-driven medical devices company. And this is how we've been driving the growth of the company from its history as a maker of test ingredients to now a much broader portfolio of fully regulated medical devices, such as test controls and sample collection devices that are now up to about 50% of our sales base. And in that portfolio of products between test ingredients, the historic antigens business, as some people will know it, as well as our QAPs test controls and our DXTM sample collection viral transport medium. We're very broadly supporting the global diagnostics industry with products and services. And it puts us in a rather unique position as we're somewhat agnostic about whose tests actually win in the marketplace, because we're working with a wide range of different companies in supporting them. So whether company A wins a particular contract in a jurisdiction or company B, our portfolio of customers is quite diverse, so we tend to benefit one way or the other across our many customers. And that's in excess of 100 different companies that we're actively working with, collaborating with at any time. Now, one thing I'll mention as well, a big and growing driver of our business is involved in the point of care testing field. And if you delve into any industry statistics, you'll see that the point of care testing industry is widely expected to have a higher growth rate than the traditional central lab-based testing industry. And that's based on these little portable instruments that could be roughly the size of a loaf of bread, either standing on end or laying lengthwise, that enables you to do a wide variety of diagnostic tests outside of the traditional clinical lab setting. And that could be in doctors' offices, that could be in pharmacies, that could be in long-term care homes, schools, film production sets, mining camps, many different areas. And this is driven by enabling technology and real instruments that do complex antigen-based and PCR-based testing with improved access to care. Obviously, you're not waiting for a GP, waiting potentially weeks for a GP appointment, then waiting for a referral to a lab, waiting for the lab to give you an appointment, waiting for the lab to generate the results, waiting for the results to go back to the GP, waiting for the GP to call you back. We can instead walk in, give a sample, and get a diagnosis within minutes to a few hours, depending on the complexity of the test. And that really results in both better access and better patient outcomes, and is thought to be an unstoppable trend across the clinical lab industry. or across the, I should say, the clinical diagnostics industry. And where we come in is our flock swab formatted QAPs or QAPs. Those are uniquely suited to support these point of care tests. We have, of course, wherever possible, we have whole genome and whole process controls, but we also have very low variability in the sample signal based on the flock swab technology that has a very consistent uptake of fluid from where you're sampling from, and then a very consistent and fast release of that fluid. So we're providing controls that control for the whole testing process with low variability, so you can get down very close to the threshold of detection of the test, which the regulators quite like. And we also have long-term room temperature stability of those samples using technologies we developed, and we can support different categories such as multiplex testing that you're seeing rolling out now, and we have products for example, rather than just running a single channel test for COVID with respiratory symptoms, the industry is already migrating extensively to tests for COVID, flu A, flu B, and another common virus called RSV that's in the headlines for outbreaks going on now. So you can distinguish between those 4 different common respiratory pathogens, for example, and that's a widespread trend across many disease categories. And as we're creating these swab-based, flock swab-based controls, we have protection based on intellectual property from Copan, our partner who makes the best swabs in the world, from Brescia and Milan, Italy, and from Microbix intellectual property that we've developed from our expertise, and also a variety of expertise that we hold in trade secrets for as well. So we're now very much linking our QAPs business, which is the biggest growth driver we expect, to the success of multiple point of care testing companies, whereby we'll be supplying our QAPs, usually on a white label basis, in kits of their test cartridges at a fixed ratio. And this is, again, something the regulators very much like and are quite correct to want, where every time you open a box of test cartridges, the instructions say, take a cartridge at random, take the Microbix control, use it to run a cartridge, and make sure everything's working. Make sure that you, as the technician running the test, know what you're doing. Make sure the cartridges and any diluents or reagents haven't spoiled, and make sure the instrument is functioning properly. With the known positives that we're providing, you can check that the whole test across its various channels is actually functioning, and you'll never go past anywhere from a dozen to 40 odd tests before you'll catch a systemic error, and then you can tie off that problem before it affects a larger number of patients. And that's something that is very much being required of companies, to have an effective control that also is stored under the same conditions as the test and controls as much of the process as possible with as much sensitivity as possible to make sure that these products work as intended and are used as intended. So for us now, the sales growth timing is very much relating to the FDA or EMEA approvals and the launches of new test panels and test instruments from different companies, especially in the area of multiplex testing that I mentioned. Antimicrobial resistance testing is profiling of organisms once a diagnosis is made. Is it going to be another big area for us? And another area, not so much point of care for the time being, but that's a big focus area for us, is actually human papillomavirus testing, profiling for high-risk variants of the HPV types, and thereby offering much more effective screening for cervical cancer programs, another area of focus for us. So a lot happening for us, and great trends and drivers for this. And it really comes down to when do benefits start to accrue in terms of sales growth, and all of these products do tend to be at acceptable margins for us as well. And the best kind of sticky, consistent business where it's a high volume of sales to a smaller number of customers, which becomes very manageable for us. So that's sort of the big picture, Deborah, that we're working to and working with. And I'm happy to go into some specific questions around how it's unfolding on a granular basis.
Sure. Let's start with some audience questions. So the first one that came in was, I still have trouble understanding the market opportunity. Based on the current product offerings, what is your view of the total market size, and what share do you think Microbix can achieve over time?
Well, there are different product categories for us, and we have three broad areas: our ingredients or antigens business, our viral transport medium business, which is the sample collection devices, and the test controls business. The first two, the ingredients business, we have about a $10 million business. It was 12 pre-pandemic. It dropped down to around the 8 million mark as fewer doctors were seeing patients and fewer patients were seeing doctors. Many tests weren't getting done. But that business is coming back quite strongly, and we see it resuming a pre-pandemic growth track. And that's a business that should be closer to 10 million in 2023, build from there back up to the 12 plus million, and then move forward, likely single digits. We'll see if we can do a little bit better than that, but that's a reasonable expectation. The sample collection devices, we stepped into the breach to help Ontario during the pandemic as supply chains were collapsing. We've received 2 very material orders from Ontario, and certainly we'll be seeking more. And we're looking to broaden out that business to become the preferred domestic supplier for other provinces as well. But that business inherently has some variability as testing practices for PCR testing for respiratory is changing and diminishing, while we're also validating broader utility for our product for other forms of testing and in other geographies. So that's done about 5 million over each of the past 2 years. Certainly would like to see it continue at that level and build from it, but has the greater uncertainty of our 3 business lines. The QAPs or test controls business, that's about a $5 million business for us currently as well. And we see that business growing by multiples of its current revenues as we lock in particularly more of these industrial sales, whereby we're the in-kit control for tests by much larger companies. And those, if you think if somebody is selling, for example, 1 million test cartridges a month, if the inclusion rate is 1 control per box of 25 cartridges, that would mean 40,000 controls a month for Microbix. That would be 1 SKU, 1 customer for that example. And that's the kind of business that we're looking to lock in.
I have some follow-up questions on QAPs and VTM, but let's start with QAPs. So based on optimism this summer around additional QAPs supply agreements, I'm surprised we haven't seen any more wins. Why is that?
We're working with, I would say, 12 different prospects right now. These are industrial sales, though, so it's a long cycle for validation contracting. And we won't get all of these. I think we'll get most of them, but it's a rich pipeline, but it does take time to bring in these and lock them down. And a lot of that timing isn't our timing, it's sometimes that of the customer. And if they have program delays or they're slower in moving forward, we're subject to that. And that's a frustration for us, quite candidly, because if somebody has a delay in an FDA or a European Medicines Agency approval, that has or a supply chain issue that has a direct and knock-on effect to our time.
And can you please give us an update on how many clients are currently involved in R&D work with Microbix? And are you currently hiring R&D staff?
We have about 14 staff in R&D right now, and there's more D than R in that. We're not doing academic research. This is very much involved in developing the customized products that are required for customers, products that support their specific assays close to the limits of detection for their specific tests. And if we can use something off the rack, as the saying goes, we certainly will. But in most cases, there's some custom development work that needs to be supported. And we have to we have to balance that. We can't go massive. We shouldn't go massively parallel with programs and hire left, right, center and move the company into big losses as a result. But we have to support customers in a timely manner to win that sort of business. So we're striking that balance. We have increased the size of our R&D team substantially, and I think we'll continue to do so, but at a measured pace. And that's where it is now, about 14 qualified scientists working in this field.
And how long does Microbix have exclusivity on Copan swabs for QAPs production, and in which jurisdictions?
Well, we have a multi-year agreement with Copan and are working very closely with them. And their intellectual property goes into the 2030s. So that is the basis of that area. And with regard, and of course with our co-branding as well, whereby we're privileged to be able to use the broadly recognized and lauded Flock FLOQ trademark on our all of our branded products that are formatted onto Copan Flock swabs. We also have our own intellectual property that dates to priority date of 2018 that's been filed on very effective means of creating controls safely and economically. That is Microbix intellectual property, and that would extend into the late 2030s under that intellectual property family. So between the two of them, we think we have a very strong position. We'll continue to build intellectual property and further relationships. And I should mention there's some trade secrets that would extend that are not disclosed in patent filings on formatting, stabilizing, purifying, all of the art elements that would be difficult to enforce a patent on others that we've chosen not to patent for that reason. Better to keep that expertise in-house.
And how much competition do you have in QAPs, and who are the most significant competitors?
There are many companies that make diagnostics or trying to make diagnostics. There are far fewer that are capable of making test controls, and most of those test controls are liquid form that are not stable at room temperature and need either to be kept frozen until just before use or kept refrigerated. So you have the whole cold chain challenges of using those. And that's a big problem from a regulatory point of view. To be compliant as a low complexity test, something that is CLIA waived is a US moniker. The controls have to be able to be kept at the same storage conditions as all the other components of the test. So that's a big obstacle. As well, the Flock swab might have a variance of plus or minus 5% on the sample signal that it gives. And a Q-tip, for example, might have variance of plus or minus 100%. So when you're trying to develop a control that's challenging the lower threshold of the test, You can't do it other than with flock swab in our estimation. And that's a very important differentiating factor from the half a dozen companies that do make controls. And those would be companies like Zeptometrics, LGC, Seracare, Biorad, Thermo Fisher, Microbiologics, and Randox are the ones that pop to mind. So it's not as if we have zero competition, but we have very specific advantages of those competitors, specifically in the point of care space based on our technology and Copan technology.
Okay, and switching gears a little bit, can you provide an update on Kinlytic, please?
I can. Very much still an active program. We have, of course, written off the value of our asset to zero on our balance sheet because of the uncertainties relating to the pandemic and the heightened difficulty of partnering a hospital-based product when the sales of hospital-directed products were dropping off because people just weren't going in for anything non-COVID related during the pandemic. Most of the logical partners were moving into survival. So the prudent thing to do was to write down the asset because the timelines became uncertain for partnering. We are still working on that, however. And interestingly, all evidence indicates there's been a big increase in the demand for thrombolytic or clot-busting drugs for whatever reason. At the present time, the European Medicines Agency has warned of shortages of the competing product TPA through 2025. And we've heard of the legacy high molecular weight or urine-derived urokinase, very distinct from our product, being in short supply in Asia, where that product is still used. So big increase in demand, and we see certainly an appetite from several potential partners to license this asset. And we're working on the kind of development arrangement whereby we will supply the expertise for product manufacturing and making the regulatory updates required to bring the product back, and in which the partner will supply the capital and the marketing expertise, with this centered on the US market. So I think we have some legitimate optimism that we will strike an alliance, and that is largely, I think, unrecognized in our market capitalization, just due to the long timeline this asset's been in play.
A couple questions on VTM. So why hasn't there been another order for VTM since last December? Might this business be declining going forward?
The data we have had is that Canada imported over $50 million worth of viral transport media of different types pre-pandemic. And the pandemic really exposed some supply chain weaknesses of those practices. So we're not looking to get $50+ million of sales in Canada for this product, but we would like to see a meaningful portion of usage in Ontario and in other major Canadian provinces coming from domestic suppliers, just for security of supply for them. And we've demonstrated that we produce a first-class product that's well liked by all the labs that have used it. So, can we secure an ongoing supply of, 30 per, quarter to a half of what is consumed, made by domestic supply? That's a kind of reasonable outlook we're looking for. And as we continue to refine our processes and pursue more fulsome automation, I think we can be globally competitive on price as well. But right now, our ambitions for that product are pan-Canadian, and our sales to date have been largely Ontario-based, but we have dialogue and interaction with very cost-effective protocols and very, very good quality product with other provincial labs as well.
Okay, and maybe we can talk about some of the other uses for VTM. Is it used for the diagnosis of flu and RSV?
Absolutely. Our product initially was validated for transport of viruses, for PCR testing for viruses, and we're broadening that out as well, that it will be valid for transport of bacteria and organisms for reculturing as well. So initially it was not designed nor validated for particular ongoing culturing, but we're increasing the breadth of qualified uses for that product as well. So that's something we haven't completed, but we are pursuing.
Okay. And then I guess there's questions specific to Ontario. Are you anticipating another order from Ontario? Maybe an update on conversations with other provinces?
I would not want to get into specifics of dialogue, other than to say that dialogue is certainly taking place. Been a lot of shifts between who is being asked to test and the testing recommendations, for example, in Ontario. But there's still 7,000 to 9,000 PCR tests a day being done in the province of Ontario. And if you multiply that out over a month, that is a reasonable number of tests. So if we're securing a fraction of that demand, I think that would be a reasonable expectation. And there's all sorts of other testing, for example, sexually transmitted infections that are DXTM formulation would be quite suitable for, and we'd like to see it used beyond just for respiratory.
I think that's it for VTM. So moving on to some corporate and cap structure questions. I guess, well, this one's come up a couple times. I can answer the first part of it. So a few people are wondering why we're doing a webinar 3 to 4 weeks before earnings. Part of that is Cameron's travel schedule in November and my own did not permit us to do one in the 2 prior weeks. I guess the second part of that question, excuse me, is around.
We would go into quarterly blackout in a few days, so we're not talking specific numbers on this, but more just to give folks a bit of an update on strategic direction and overall outlook.
Yeah, exactly. Can you comment on guidance for the year?
No. I think we'll be continuing to work forward on this. Our continuing objective is for profitable growth, and that's something that we'll be working on. It's not to say we'll never have a quarterly miss. I think those things are inevitable for every company, but our prospects and our outlook is to keep growing and keep being profitable each year.
And can you give us an update on share buyback? How many shares are expected to be bought back and how's it proceeding?
In terms of the share buyback, we put that in place as an effective use of capital, as well as to offset some of the several reasons. In fact, one of which is to offset part of the annual stock option award dilution. We issue we have a 10% stock option plan allowed, and we issue warrants each year that have options each year that have a 5-year life. So we're issuing about 2% stock options each year in terms of the shares outstanding. So buying back some shares is a use of capital. We have a stock repurchase plan that permits us to buy back up to 5% of the shares outstanding. If we're buying back at least 2%, we get into a net zero dilution or an anti-dilutive position where the number of shares outstanding is not increasing every year, or maybe in fact decreasing. So that's good for shareholders, as we have fewer slices of a growing pie as we build the business, benefits each shareholder. It's an effective use of capital as we're generating net free cash flow, that we're deploying capital effectively, the repurchase of shares. And in very challenging environments, capital markets environments such as we're in, there are very interesting smaller life science companies that actually may want to become part of Microbix as they're facing difficulties in achieving scale of relevance to investors, even though they have a great business. So preserving the value of our shares as currency, or helping to preserve their value by way of a normal course issuer bid, also makes sense. So there's a bunch of advantages: capital deployment, capital structure, and preservation of currency that are very effective for this. And that's our rationale for having put it in place. In terms of the deployment of it, as I mentioned, we're permitted to buy back up to 5% of the outstanding common shares over 12 months according to the plan. That's about 7 million shares, but there are very restrictive rules in place by the TSX, largely geared to prevent companies from manipulating their share price through a normal course issuer bid. So, for example, we are not allowed to buy on an uptick. We are only allowed to buy back 25% of the average daily volume for the preceding 6 months before the approval of the NCIB, and we're only allowed to react to one block trade per week under the NCIB. So in the first month of the plan, we bought back, I believe, 372,500 shares. We've not yet concluded our buyback for the month of November, but we're probably in the range of 200,000 to 300,000 shares for November. So we are actively using that normal course issuer bid as we said would, and as shareholders, I believe, would want us to.
And can you talk a little bit about capital allocation? The NCIB is relatively small compared to cash available. So are you looking at other opportunities to deploy capital?
Certainly we are. We will spend about, going from memory, but I think our capital allocation over the next 12 months will be in the $1.7 million range. My memory's like a steel trap, unfortunately, more like a colander than than other things. But that's what we're looking at in terms of deployment. We will not take our cash down to zero. If there's there's a value in business development to prospective partners that are really going to become dependent on Microbix as a critical sole source supplier to see a good amount of cash on our balance sheet. So I think, we probably won't want to go a lot below 10 million. Maybe we'll go to 7 or 8, but certainly we wouldn't go below that. Right at year end, we were close to 14 million. We'll spend about at least, as I said, 1.7, maybe $2 million on CapEx and different systems across 2023. And we'll also see some draw into working capital for inventories and receivables as well as we continue to build the sales of the business. So I wouldn't want to see us get to a position where we have scanty working capital. Right now, we're very, very strong position with the current ratio of about 6. And a debt to equity ratio of under 0.5. So we'll continue to look at that. We would have the option to repay debt, as some of our mortgage debt, for example, that's floating rate if we see interest rates continue to increase. But we will want to keep a healthy amount of cash on the balance sheet for business development reasons, if for no other.
Okay. And have you considered a dividend?
No, we have not considered a dividend. I think we have had 7 consecutive quarters of profitability. I think we would probably be more inclined at that point to continue to staff up and increase our capacity before we would start dividending out capital. The NCIB is a modest draw. The normal course issuer bid is a modest draw on our capital, and for more strategic reasons, a dividend is purely dispersing capital, and I don't think we're there yet.
You're still in growth mode.
Quite right.
Okay, and I had a question about what's going on in China right now with the COVID cases rising. So at its peak, the US had 5.5 million cases per day of COVID. That would translate to 23 million cases per day in China, given the population difference. China's only at around 30,000 cases per day, with concern it's now breaking out. Does this impact Microbix at all? Do you expect that, number one, do you expect cases in China to go crazy like they did in the US? And number two, does this benefit you in any way?
Believe I have any visibility on what is going on in China. When the CBC has shut down its bureau in Beijing, very difficult to know what is going on in different cities. There are cities of 10 million or more people that Canadians don't know the names of, generally speaking. So a great deal of opacity there. The only area where China does have an impact on us is on the sales of some of our test ingredients, our antigens business. And we are starting to see the resumption of some sales into China via our distribution partners. So I think it's the old question of a mystery wrapped in a riddle surrounded by an enigma, I think was the comment. I think it was Churchill during World War II, but I think a bit of that applies to China today and going forward.
But you don't have any BTM or QAPs business related to?
No, only a portion of our test ingredients business.
And your distribution partner on the antigen business was recently acquired. Has that relationship changed at all as a result?
No, it has not. There continues to be a very strong relationship, and we see it continuing that way. Okay.
And going back to, you referenced earlier your stock option plan. I had a question around that from earlier. So bear with me. So 10% of Microbix stock can be made available to employees per year. My concern is not the distribution of stock to worthy employees, but the amount of stock. 10% is too much considering the company is not growing that much, blah, 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 blah. Please consider 3%. Maybe you can comment on that, Cameron?
Absolutely. There's been a disconnect there in the amount made available. 10% is not made available per year. 10% is the overall amount available at any one time. So, in fact, we are below the 3% that investor was suggesting per year, and they're typically issuing 2% per year. So the plan is evergreen and will never move above 10% of the options the options issued will never be above 10% of the shares outstanding. And because we work to make sure the plan is evergreen, typically we are well below that 10%, usually below 8%, in fact, of the shares outstanding, and the amount that is newly issued each year is on the order of 2% of the issued and outstanding common shares at that time.
Well, I think that helps clarify that for sure. Are there any significant impacts of recent FX changes on your business?
Yes, there's been some pretty big swings in terms of the euro to Canadian dollar has swung around. The euro has fallen off very sharply relative to the Canadian dollar, and then has come back closer to historical ranges of late. Similarly, the Canadian dollar to the US dollar has swung around a fair bit. Excluding DXTM/VTM, the majority of our revenues are denominated in US dollars or in euro, more US dollar than euro. So we do see some FX impacts, and those are the impact of a change in the US dollar and euro are disclosed in our MD&A. I don't have those figures off the top of my head, but there is disclosed sensitivity analysis in each quarter's MD&A about the potential impacts. We also, are seeing impacts of inflation. Supplier prices are increasing, and lead times as well are increasing. In some cases, quality is decreasing. So we are faced with those impacts and consequently need to push through price increases to some of our customers. SKU dependent in some cases, but price increases are certainly planned and necessary to pass through supply chain price increases.
Thanks, Cameron. Sorry about that. The sun decided to come out on the West Coast, so got a little bit of glare. I couldn't
Get it when
read
you can. Yeah.
Yeah, exactly. Okay, so just a couple more questions. So this maybe we can answer jointly. What is the company doing to increase the share price? That's from a long-term shareholder. I mean, we continue to do marketing, webinars, updates. We did a roadshow recently at a conference in the US recently. Also, our friends at Industrial Alliance recently did a roadshow for us. I think like the focus, which actually we're going to be discussing later this week, will remain on continuing to expand our relationship and investor base in Canada and into the US. Cameron, do you have anything additional to add?
I would add that it's cold comfort, I know, but we were going through the fastest and most aggressive cycle of interest rate hikes in 40 years, and this is impacted as investors for the first time in many years are seeing a bond yield that is greater than zero. The time value of money investing in smaller cap companies has a greater cost to it, and that is impacted smaller cap company valuations very broadly, including our own. So we're down from a 5-year high of 87 cents to 47 cents. So we're knocked back substantially as a large part of result of that. But we have been hit much less hard than many other of our peers because of the strength of our financial position, which is not by accident, and the fact that we have a sales-driven business, which is also not by accident. So there are many life sciences companies that don't have a revenue-driven business model and don't have a good balance sheet that are trading below cash value. We are certainly not one of those and don't see ourselves going there. And as we continue, the best thing we can do for share price is continue to effectively build our business, add to customers, add to revenues, and demonstrate those solid prospects to all our investors. So that's what I would say, and from a macro point of view, and from a more specific point of view on the IR side, Deborah, as you were indicating, we're certainly out there telling our story and explaining why we're a stock that different institutional and individual investors should consider owning.
And I was pulling some information for your board meeting this week, and TSX healthcare sector was down 56% year to date so far. It's been disproportionately hit, that and technology. So those two sectors in this environment have been underperforming. But agreed with your comments, and hopefully we've reached peak interest rate hikes, and hopefully lower hikes or less hikes will benefit us going forward.
Well, and we're not a consumer discretionary either. I think is this isn't a question of whether somebody's going out to get buy a new wardrobe or a new automobile. Healthcare is something that you need where you need. I recently read a great quote about health that said, when you're healthy, you have 100 problems. When you become sick, you have one. We're in that category of helping people find out why they're sick and get on the path to a solution. And that's not something that you say, gosh, I'm going to stay sick because interest rates are a smidge higher. We're the very essence of a company that is essential. So that's what we're continuing to do and work with top, absolutely leading edge companies in the field. And it's so gratifying to see our product management and the product development and manufacturing teams impressing the hell out of world-leading companies. And that's how we're going to keep landing business.
And what's your targeted release date for Q4?
Should be for Q4.
I thought I had it at the 17th of December, but that might be.
No, we'll be should be the 22nd of December. I believe our board meeting is Wednesday, the 21st, and our release date should be the morning of December 22nd.
Okay, great. That's it for audience questions. Oh, one other. How many employees do you have now?
Just counted, we're at about 110 employees currently, and that's a number that reflects some of the demand for product development support, and that's about 100 full-time employees and 10 contract employees currently. And if we look back 3-4 years, that would have been around 60 employees. And we're certainly not increasing headcount for the sake of headcount. We're increasing headcount to continue to grow our business. And as I've said before, and we'll say again, we're putting in place the infrastructure to support a $100 million top line business. And some of the work that we're doing on that, for example, upgrading our enterprise resource planning software capabilities. That's the ERP systems that enable you to track and control everything from raw materials procurement through to finished product release and billing and collections. So that is a big project to improve and modernize those systems. And we're also moving from a paper-based quality management system to a fully digitized quality management system. Each batch of QAPs products or test ingredients products can have a batch production record that is the size of a telephone book. And as that activity moves forward, you just cannot continue to do that on a paper-based system. So that's another EQMS is what that's called, project that we're embarking upon. And I'm pleased to say both of those are proceeding very well. So that's one of the things that enables you to run the business at a greater level of intensity and speed and not have systems break and collapse. And frankly, also provides us the better opportunity to even consider tuck under acquisitions as we have systems in place to more effectively integrate acquired complementary revenue streams in addition to the organic growth that we're already demonstrating.
That's it for questions, Cameron. Is there anything else you wanted to discuss today? Anything you wanted to touch on?
No, I think the big themes I would look at are, the breadth of our support for the global diagnostics industry across various categories, and the big benefits that we are targeting to see from the broader traction point of care testing in the marketplace. For example, I was at a industry congress in October, and it was discussed that Walmart in the United States is planning to launch, I believe the number was 4,000 point of care testing centers in their stores over the next few years. And that's the kind of deployment of point of care testing that will really be quite dramatic for us. You have 4,000 wellness centers by 2029, up 30 to 40 today. So is Walgreens wanting to open 600 testing centers using a quarter of the pharmacy square footage. These sorts of evolutions that enable us to get healthcare much better access and much more quickly will benefit us. Also, the move from 1950s style pap testing, where a pathologist may tell a patient that you have cancerous cells, through to going 5 years earlier and saying you have a virus that may cause cancer in 5 years. Let's watch you carefully to make sure that doesn't happen. these are the evolutions that we're supporting and are proud to do so. And I think our shareholders are going to see some very real benefits over time from doing that.
Okay, great. Well,
So
I'm sorry, go ahead.
I'll just say, you know, we're going into next week, this coming week, we have our annual board offsite for strategic planning and review. So a busy week for us, and glad to slot this in just before we come to dive into that. And also, I'd like to ask shareholders to join me in thanking the Microbix team, from our C-level to our newest recruits. We just have a fantastic bunch of people that are doing superlative work, so and very dedicated. So thank you to everybody on staff who may be seeing this, and thank you shareholders for entrusting us with a portion of your capital as well. We take that trust very seriously and are doing our damnedest to reward that trust. So thank you.
Okay, great. Well, thanks for your time, Cameron. Thanks to the audience participants. If anyone has any additional questions, feel free to reach out and I'll get those answered for you. Yeah, everyone have a good week.
Okay. Thank you so much, Deborah. Thank you, everybody, and take care. Bye.
Thank you.